Ladies and gentlemen, it is I, Hugh Hendry. I'm on the line from St. Bart's in the Caribbean, and I am here today on the 20th of October. Just another day in the crazy world of money. My brothers and sisters, I believe there are 2,000 of you. I see the data points on my app. Thank you so much for tuning in. Tuning in to another day of no economic data. Thankfully, the Chinese are great friends. Oh, are we at war with them? Oh, is it a business war? Oh, is it a decoupling? Is it a divorce? I read many D words over the weekend. Talking of which, I hope you had a wonderful weekend. Me, I caught up on a lot of sleep. Anyway, the Chinese lent some support today. We got, let's call it mixed data from the Kingdom of China. Again, I'll come to that. But I'm thinking cookie vibes. And how I prepare for, and look at me, well, you can't look at me, I'm in your ears. I don't know what I'm going to say to you. But I've been thinking, I think I saw this I saw a routine on Instagram. A Chinese, they look Chinese, and he was a professor. I can't recall his subject matter. Storytelling, perhaps. And he said something that struck a chord with me. And he was talking about creativity. And he was talking about what the textbooks, and what rational minds, what they don't tell you. And the big hook, social media, the hook is no scientist in the history of the world. Oh my God, I want to change these glasses. No scientist in the history of the world has ever discovered anything. Nothing groundbreaking has been discovered by the scientific method. Yes, nothing groundbreaking. What is the damn scientific method? You know, the research first, sketch an outline, pursue evidence to support thesis. That's tidy, but it's not how certainly my mind works. Because and this is important, because this is kind of the founding stone of why I wanted to do acid capitalism. To put creativity at the forefront of like young kids coming in, to have the courage to say, it's a blank canvas. And it's almost like being a painter or graffiti on the wall, that the wall or the canvas is blank. And you're sketching out typically a contentious narrative, maybe a beautiful narrative, a beautiful mind. And you're seeking wealthy patrons to support and sponsor your sketches on the wall or on the print. And in that world, we don't discuss process, but thinking starts with the idea, with the narrative. Okay, let's try and get back into it, Hendry. It is a fear. The fear is I would talk. I was listening to Jeff Snyder's podcast. I would recommend you panic, and also that you listen to the Eurodollar, Jeff's podcast. And apparently he recorded his podcast and he didn't have the volume and had to do it again. That for me would be hell. So my creative thing, I see the shape. And it shapes. I see shapes and images before I understand what they are. I I'm a touchy-feely kind of person. And sometimes I'm not even sure exactly where the feeling comes from. But the process is very much, it comes later. And you've heard Druckenmiller does this. Let's put it into Stan's voice. Buy first, investigate later. I'm talking about the genius of Stan, Albert Einstein. He wasn't running lab experiments. He didn't have a white coat on and a Bunsen. I love saying that, Bunsen burner. When he figured out relativity. No, I think he was sitting in a patent office, daydreaming, bored out of his skull. Funny. Patent office. I was going to draw a comparison with Ian Curtis, the tragic lead singer of Joy Division, who tragically took his own life back in the end of the 1970s. I thought he worked in a patent office. He didn't. He worked in the kind of unemployment offices trying to sponsor you and trying to get you a job, get you off the dole. But yeah, back to Albert. He's wiping the dust off. He's daydreaming, and it jumps out of his skull. Relativity hits him. Boom, boom. I got to do something about this. What would it feel? What would it feel like to ride a beam of light? And from there, you work backwards. You see the future, and then you bring it back to the present. James Watson had been, oh God, I was going to say grinding. That doesn't sound like the right term anymore. He'd been working his ass off for years, trying to understand the damn structure of DNA, molecular DNA. What's it all about? And then one night he dreams about a staircase, not just any staircase, a double helix staircase. And he's like, wow, maybe that's the shape. And from that point on, we know the conclusion. And I gave you a story from the Market Wizards about 10 days or so, where the great investor actually dreams the trade balance data, which is released exactly how he dreamt it, with all the revisions, everything and the share price and bond yield reaction, exactly how he planned it as he slept. It's in the mind. And it differs. This is creativity. This is not, and this is a passion of mine, because asset capitalism is trying to put very firmly creativity to the forefront. It's certainly the same with me. And this damn daily podcast. I don't think many of you think I wake up early. I don't read 20 research notes. I don't take careful notes. I don't spend hours like with a scalpel. I spend hours on those damn essays. And I was trying to write on one at the weekend. Oh, it's a slow process. But mostly what I prefer to do is I'll lie in bed. I'm a bit like John Maynard Keynes. I like a little cup of tea in bed. I like to flick through the social feeds on my computer. I bring my computer and I give it a cuddle in bed. I am that romantic. Maybe I'd read a few pages of a book. Mostly I'm reading stuff off screens. I go to the gym every day. It's like mental flax. I have to move and do things and stretch. And then I'll sit in a cafe. I drink a lot of coffee. And thank God the island's got busy and there's more and more beautiful ladies coming back. So that keeps me on guard. And through the course of the day, very, very slowly, ideas begin to arrive. Arrive from where? I'm not quite sure. I think it's all about receiving, being open. I think I'm an open person. And then I come back, I sit out, I've got a desk outside on the deck. It's bloody hot and humid, but I like it that way. And I sit down on the computer and I kind of try and unfiltered kind of write it up. And then I take a nap and I try and reflect on it. And in the evening, I kind of look at, well, I mean, where do the ideas come from? But by looking at charts. And this week, we're going to be looking at all of the, not tonight, but this week, we're going to be looking at, I am bringing to you chart porn. I am going to be presenting to you a very, very long carousel of every constituent stock of the Nikkei 225. So we're going to have 225 chart stocks, charts of stocks. And I'm going to take it, and that ain't going to work on a podcast. Imagine. Again, I would encourage you, join the Substack, become a Substacker, and then you'll see this, because the charts will go back to the 1970s. And I'm going to be showing you the power of these long congestion periods with price ceilings and the energy that's released when a price makes a new high. I'm looking forward to that. So I'm going to have all the charts, and we'll spend about 10 seconds per constituent of the Nikkei. And may I just say, yes, I mean, I should have said, US markets, good day, up between 1.5, between, I don't know, 0.7 and 1.5%, depending on the flavor from the Dow to the NASDAQ. Japan, however, just boom, like 2.5%, and aftermarket people rushing to get in. Japan, I keep saying to you, Japan's the place I want to be invested in. And so I'm looking at charts, and then then I feel like really uncomfortable, like, oh my, and I'm full of dread and doubt. But then I speak. I'm speaking now without a script. And I'm reacting to my own vibe. So I do record, and I see myself as that narcissism. I'm having a conversation with myself. I'm listening to myself. I'm listening to where I'm struggling. I'm trying to slow down in parts and trying to retrieve the thoughts. And I'm trying to have trust and confidence in who I am. Too often, and I'm the worst culprit, condescending, we put ourselves down. Why are we doing that? And then when it's over, so I do find this exhausting, but when it's over, I'm just amazed. I don't know where this stuff comes from. And I play it back. I'm like, who is this guy? This is interesting. Anyway, enough about me. Let's see. What did the damn Chinese say? I think we'll be talking a lot about the Chinese today. GDP is all fake. Fake news. GDP came in at 4.8%. And depending on the clown that you read, that was either great or a little bit disappointing. Is that third quarter? I mean, God, they're efficient. Third quarter, boom, they're out. And people were like, yeah, they're probably going to miss their, the government says, we're going to grow at 5. And if they did 4.8 in that quarter, they might just come in a little. Who cares? I don't care. It's all phony and made up. Why is it phony and made up? Because it's the Steinbeck. If the beast doesn't grow, the beast dies. The economy. There was a Twitter, I'm sure you read it, by some guy, Campbell, and he is an he left a major hedge fund shop 5-10 years ago to really get precise and to trade the inevitability of the slowdown in China. So well done him. I think we were seeing similar things at the same time. I hope he had a lot more good fortune than I did in monetizing what's happened in China. But he was going on about, this fragility and anti-fragile. Are we anti-fragile and China is fragile in terms of our social construct? Do we entertain it? We accept it? Strife? Like, I don't like you. Like, we're allowed to express hideous views. It's called free speech. We're allowed to kick politicians out of office when they bore us, or when we just have contempt for them, when they disappoint us in economic growth terms. None of that, of course, prevails in China. And China's the deal, the fragility is we're fascists. We're not going to give you any damn freedom. We're going to be, like you should be richer, but we don't trust you to be rich. But your standard of living is going to be better and better every year with us if you put up with us. And for the most part, people put up with it. But China needs growth. And so it engineers an economic growth. It's like a very, very poorly disciplined company that spends more and more and more and more capital to chase sales, which accepts a declining marginal rate of return on investment. And the hallmark of that is when the marginal investments are contributing less and less, if at all, then you end up requiring more and more debt to sustain these poor investments. That is the history of China. And sometimes, forgive me, sometimes I call China Japan. It's just very late. My mind is crowded with thoughts, fears, trepidations. Anyway, so China has been pursuing very, very high rates of GDP growth. Those rates of growth have decelerated from about 4 times the prevailing level in America, and presently is like maybe 2 times. But it's a fake, it's a phony, because it's not real. And by that I mean when you grow and you grow properly and you allocate capital, you create wealth. And one of the signs of that is in the stock market. The stock market, yes, it may have periodic reversals. Sometimes it may crash, but the march of time, when we measure time in decades, it goes up. It compounds at 7-8%. That's not been the case in China. Anyway, so what else did we see? So the rate of growth, the second quarter had been 5.2. We're discussing decimal points. So 5.2 to 4.8. Retail sales third quarter up 3. So retail sales and the consumption, always a slower rate of growth than elsewhere. Like industrial production was strong. Exports were strong. Property market investments were really, really, really weak. I think down 10%. Zed's dead, baby. Zed is dead. But exports, like growing at 6%. Who's not importing Chinese cheap electric vehicles? I mean, look at a tin pot place like St. Bart's, which is kind of, sometimes things fall between. Presumably it's France and Europe, but yet it's in the Caribbean. And the car rental companies, which are responsible really for bringing the majority of cars onto the island, except for the acid capitalist. I hope you've seen my beautiful 110 Defender. But the other cars, pretty much is a second-hand market. They buy new vehicles for the rental market, and then after 2, 3, 4, 5 years, they're being sold to the 10,000 hardy souls that stay here year round. In the last 12 months, all of these rental cars, and they look like European and American cars, and they have brands and badges which resemble Renault and the like, but they're all Chinese. And almost every new car on the island is Chinese, especially the kind of 4x4 kind of ones that resemble Jeeps or Land Rovers. You can buy them for less than $20,000 landed, and you can rent them out in the high season for maybe $2,000 a week. So that's exports, but obviously the US has pushed back. And indeed, that's my exclamation. Here we are, this world of tariffs and the possibility of 100% tariffs, and certainly there are tariffs now on all of the Chinese goods coming into the States. And the US is what? 28% of global GDP. Are US exports growing at 6%? Are US imports from China growing at 6%? Don't know. Wish I checked that. We'll check that. Does that mean they're growing, imports into Europe are growing faster? Killing off the European car sector. And some of the results, the Volkswagen results, etc., catastrophic. Fragility, anti-fragility. Do we really know what the unemployment rate is? I'm sure you've read how when they don't like some of the data points, they kind of make sure that they either change it, they suspend it. Oh, it's like the US. Pot, kettle, black. The Chinese seem a lot worse. They just eliminate some of these things. But I was surprised to read, because I thought there was one of these statistics that they had attempted to erase. But I saw that youth unemployment climbed to 17.4. Or is it that youth unemployment real is like 27.4? Don't know. And then you've got deflation, producer prices, almost down 3% year over year. Anti-fragile, a mirage economy. It's damn frustrating not knowing all the answers. Let me give you an example. China's M2, so that's the commonly accepted place you go when we talk about money supply. And their money supply is $45 trillion. $45 trillion. Money supply to GDP is, 2.5 times? There's almost nowhere in the world that has that level, that ratio. For comparison, US money supply is $22 trillion. And money supply is the deposits of the private sector, banking community. And I mean, it's got nothing to do with you putting money on deposit. A bank makes a loan, and this digital creation turns into your deposit account. Like you get a mortgage, boom, it's in your, for a nanosecond, it kind of comes through. Oh, Hugh, here is $10 million. Oh, and it's gone because now you own, a house. Or the bank owns it if you don't pay your money back. Anyway, US GDP 28 trillion to 22. It's kind of the convention. Let me say it again. China, 45 trillion. And yet, they want to bitch about the viability of the US dollar. And again, they were out again to saying, oh, we're going to have our BRIC currency and it's going to be greater than the US dollar. Please, people. You're the 2,000 people. There's 5 people who truly understand money. I'm sorry for that tease, but there's 2,000 people who listen to this show that know that this brick taking over the dollar is apocryphal. 5 people understand money, 2,000 people are getting there. We'll talk about gold as well. Again, my God. But yeah, 45 trillion. So the Chinese currency is, so it's a closed capital account. So it's very hard to kind of bet against it. I think if it was freely floated, the monetary dynamics would be a huge cause of concern. And it's one of these things. If they were to open the capital account, where would the currency trade? And I really like that as an exercise because the currency is undervalued on the basis of how successful they are in exporting. I hesitated in using that word successful, which takes me back to the GDP and the fakeness of GDP. And it's almost like the fakeness of successful exporting. Is it successful exporting if you are succeeding? Because not in all, but in important areas of the economy, you're encouraged to export and you receive subsidies. And subsidies can take many forms. Labor conditions, environmental conditions, tax rebates, subsidized loans. But an environment is fostered where profit is not the constraint, or indeed the objective. The objective is world domination. So success in the export markets, let's just say they're successful. The trade surplus in manufacturing is enormous, over $1 trillion. So that it's over 1% of global GDP. And we've got, I don't know, 100, 150 years of that kind of metric. And that's really, really high. And, history doesn't exactly replicate. It rhymes and all that stuff. The message is other societies push back when you get too big. And we're clearly seeing pushback. Trump tariffs. I say Trump tariffs. That was the first administration. Those tariffs were largely kept in place with the Democrats. Europe is reviewing a lot of areas in terms of anti-dumping kind of charges and maybe introducing its own tariffs. That's pushback. And we talked about anti-fragile. The Chinese growth is exports, is production of more and more capacity. So making things internally to produce goods and services to export into a world that's like, I just can't really take any more because the more and more I take, you're wiping out my German car industry. You're making it impossible for me to have an onshore strategic set of industry. I'm too reliant on you. Let's push back. So where were we? If they liberalized their capital account and they said, hey, we want trust. We want you to trust us. Imagine that. We want you to trust us. We want you to have the trust to open a bank account in Beijing. Come and buy property. You can take over Chinese companies. Imagine that world. And our Chinese citizens, they can They can transfer as much money as they want overseas, like Americans and British and Europeans can. Where would the currency trade? So, the exports growing at 6% in the third quarter, the trade surplus being very, very high. All of that would suggest the currency should trade to like 5 from 7. So it would appreciate. But then, of course, that would, and it would if you were introducing trust. But I don't think the Chinese are ready to introduce trust. And so that's an issue because they've got to, it's the kind of the trilemma, the currency, the banks, come back to the banks, social stability. So social stability is the thing they have to preserve, or they're gone. The banks, well, all of that money created the property bubble. Didn't just create it, but closed the capital account. No real positive returns for savers domestically, and so savers create a rewarding asset bull market, which becomes bubble because it gets reinforced by government money, which takes you back again to $45 trillion, which is an insane amount of money. Let's talk about gold. China has been accumulating gold reserves, especially since the shenanigans, the seizure of Russian financial assets as punishment. Punishment I support for its invasion of Ukraine. And yes, what if America invaded Venezuela? Well, it would invade Venezuela to do regime shift, and then it would kind of leave, having either screwed it up or made it better. But it wouldn't stay and carve the country up. Oh, it would be there expropriating the rights for the minerals. Maybe. China has been accumulating gold. And China now has a third of what the US has. The US has the biggest amount. I spoke about this on Friday. US has, did I say, the three twos, 222 million troy ounces of gold. That's $1 trillion. $1 trillion. Let's play a game. So $1 trillion and 22 billion of M2 resources, M2 money. So what's that? It's about 4%. China, that figure is 0.3 divided by 45. Nothing makes sense with the movement in gold. The notion, so gold's going up because the Chinese are buying. Okay. How much? Well, okay, yeah, they've been buying. What damn difference does it make? I think the Italians and the Germans have got very, very similar amounts of gold reserves. Very, very large. And yet, Italy had to, it couldn't keep its currency. Its currency was notoriously weak. So gold didn't help there. Doesn't help Turkey. Yeah, it doesn't help Turkey defend its currency. It's high interest rates that are required to defend its currency. And if it would do less crazy things in its political administration of the country, that would help. So US money, US gold is 4% of M2. What would, oh my God, I can't do these things. What would let's do that sum for China. If it's 45 trillion, 10 would be 4.5, 0.4, 1.6. China would need to buy 5 times as much gold than it presently has. And then it would have about a 4% representation, 4% of its M2. Would that matter? Why does China care? Because it can't be seized, right? It can't be seized. Where is the money from that coming from? We're saying that China would have to accumulate another, $1.2 trillion worth of gold? Is that 1.2 divided by 39? 2% of the gold market, roughly, I think. Where is that money coming from? Because they're in a hole. And again, this is where it's frustrating. So 45 trillion, where does that money how do you develop that money supply? I mean, that money supply comes in largely from the exports. You're receiving, I don't know, $100 million because you've just sold EVs into Europe. You price them in dollars. You need renminbi. You sell the $100 million to the central bank. And they issue this new money, and then they probably say to the bank, "Oh, we require a reserve ratio of 10% on that." But fractional reserve banking, that 100 million gets fractionally reserved into a much larger figure in terms of bank loans. Money supply was expanding, I think 6 or 7%. Again, in China, money is expanding 6 or 7%. Again, wow, because the economy is kind of on its ass and it's got deflation. And we hear that, and the banks are poorly capitalized. They got huge losses from property. But the money supply growth means they're lending. Well, why not? So there's extend and pretend. They're not being paid. They're just not marking it to market. And then they're being encouraged to make more loans. Is that fragile or anti-fragile? Gold again. When's this blow off top going to end? Well, in 1980 it ended. It ended at $850. And I was doing the maths, and I did take notes on this. Yeah, at $850 an ounce back in 1980. So the American reserves haven't changed. And again, there's a suspicion, which will not help you, but there's a suspicion that somehow that the 222 million troy ounces of gold held at Fort Knox is not there. Where is it? I don't know. Aliens took it away, or we paid off aliens not to take over the world. Or again, we're on a fiat currency and we're all screwed. At $850 in 1980, America's gold reserves were worth $190 billion. And M2 was 1.5 trillion. So if we're trying to construe a rationality in the notion of gold having purpose in the monetary world, and we're looking for extremes. So what I'm doing is, rather than just saying gold is going up, I think the more endearing exercise is like, it's like, I can't say it's valuation. There are no earnings. Warren Buffett always been staunchly against non-earning assets. He's like, give me 1,000 acres of farmland. I'll grow something and it'll generate me cash. And with that cash, I can buy goods and services, or I can buy more property and and grow more crops and create more income. Can't do any of that with gold. That's why I call it, I've called it preposterous and stupid and silly, silliest asset market. And it's been annoying me. Forgive me if you've seen any of my things on YouTube, but I'm just not entertaining the fools that say, "Oh, you said gold couldn't go up. Here, here it is at 4,000." I didn't say it. I would never say something could not go up, but I did say it was stupid. Gold is stupid at $300. It's stupid at $3,000. It's stupid at $4,300. It would be stupid at 6,000 or 9,000. But trying to take the lead from the monetary system and the notion that, and really we're doing something preposterous because we're trying to go back in time. Let me just tell you something. We decided as a society that we didn't need gold in the organization of our monetary affairs. 1917, Nixon says, we're going to a 100% belief system. The dollar, it's the dollar. You can't redeem it for gold. That's happened. You could maybe go back, but that's happened. And again, to go back, think of how hard it is. Think of how hard it is. Stay with me a second. Gold, which hadn't been allowed to trade with market force for 40 years, was $35 in 1970. And it rises 24 times in the 1970s, from $35 to $350. Okay. We are clearly in a monster bull market for gold today. So let's put it back in the context of the 1970s. Where does that look? Well, we came off the low of $275. We were down there between 1999 and the end of 2002. The British Central Bank and other central banks sold gold. The Brits sold 55% of their reserves. So let's use $275. That's our $35 base. And let's say this bull market will be as great. And that's a big deal. The bull market in gold in the 1970s, something which hadn't traded for 40 years, so it was incredibly cheap. And like I was trying to say the other day, we then started hooking tubes into it, futures, options. We said family offices can have it, pension funds can have it, everyone can have it. And it goes up 24 times. So that's a huge bull market. 35 to 850. Now, if we go 24 times the 275, gold goes to just under $7,000. $7,000. Gold has enjoyed the same amazing bull market as it did in the 1970s. I can't say that won't happen. 1970s, it hadn't been allowed to trade for 40 years. It then opens up and boom, 24 times. This time, the S&P, I think, had gone up 20 times and go from the profoundly cheap levels that prevailed between 1980 and 1982, when the American Federal Reserve had very high rates of interest rates and was slamming the economy to its knees and choking out inflation. Stocks went up 20 times. Gold fell by 2/3. So is that comparable to 40 years of not trading? Let's say yes, 6,700. And where are we today? Somewhere between 4,300. It'll probably be 4,500 tomorrow. So I didn't see it this high. It could go, there you go, it could go to 6,700. You can get a different statistic on it, however. What if the market decides, let's look at 1980, and it got to 12% of US M2. Okay, so $22 trillion. Today, at today's price, that's only 4.5%. So that would suggest, so if we were to trade pari passu with 1980, the gold price would triple from here. That I would say is not going to happen. I'm going to say it's not going to happen. There's no need for it to happen. And let me say it to you again. Society 50 years ago, 55 years ago, said, gold, your time's over. We had a gold standard. It finished at the end of the 1920s. We've been kind of pretending. 1930s, the decade of the 30s, the 40s, the 50s, the 60s, the 70s, we're done. I don't see any relevance for gold to seek a valuation of 12% of money supply. And also think of how impossibly ludicrous the situation is in China. $45 trillion. 12% of $45 trillion. China would have to acquire, what's that? So that sounds like $4 to $5 trillion in gold reserves. So it would have to increase its purchases 15-fold. Why? And you're not even allowed to hold its currency. If you were allowed to hold its currency, Chinese citizens would sell it and buy dollars. But anyway, gold, when it was liberated and free to trade, went to a price level which equated with 12% of US GDP, of US money supply. And maybe it's been liberated. I don't know where this liberation came from, and maybe it's going to trade trying to seek out a similar level, and so that gives you a much higher price target, which I think is nonsense. And this whole death of the fiat. Again, my buddy Ben Bree, and he just took his Bloomberg's brilliant. You can take charts from the early 1970s. Wish I could get those charts. Oh, I do have those charts from friends. People saying one thing, price is doing another. For 55 years, the dollar, which is money, it's not an asset, and it's gone up against a basket of other currencies. And for the inflation, you have inflation hedges, and you don't need gold as an inflation hedge. The S&P over 55 years has been a more profound inflation hedge than gold. I'm no more on gold. Albemarle, lithium. Let's do a strategic pivot, which sounds a little bit too much caught in the crosshairs of the day's flow of data. But I wanted to discuss Albemarle, which is an American stock. $ALB is the ticker. And it's got a share price which goes back a long way. Clicking my screens. Ben sent me the chart earlier. Looking at it now. What year is that? I've got a chart starting in 1995. It's not a huge long time. 1995. 30 years. And it goes up over time. But I wanted to discuss it because I'm trying to get some. So we're saying that is an art, and we can be creative. But there is a laboratory, and there are some rules. You've got to wear goggles if you're using a Bunsen burner. Rules. And surveying the wreckage of the reputational damage from my dalliance with TLT and trying to buy the long end of the bond market too early. Now again, okay, mea culpa. But again, in my defense, I I knew that, and I bought call option, which is a really really small component of the portfolio as a speculation, just as a starter, because I was curious. So I didn't put. And typically, if you were investing in bonds, you'd have like 40, 50, 60%. You've heard of the bond equity, the 60-40. You'd have 60 in equities, 40 in bonds. So I didn't do anything like that. And I didn't do that because I didn't have that large allocation of wealth or my investment portfolio into long dated US treasuries, because there was no positive trending price. And I want to talk about Albemarle because I keep saying that just about everything today, apart from the bonds, is trading kind of like, let's call it between a window between 20 and 40% above the 1 year moving average. And sure as anything, stocks mean they go up. US stocks have consistently gone up over time. They've compounded at 7-8%, if not higher. Certainly the growth rate over the last 20, 30 years is probably like 10, 11% per annum. Certainly the last 10 years. But with mean reversion around a rising trend. And so I bet you anything that gold and stock prices will revisit their 1 year moving average. They will mean revert at least one time, and I'd argue more than one time over the course of the next 12, 18 months. And so now it's a rising trend, and it may be that if the mean reversion happens in 18 months' time, that the 1 year will be higher. Well, it will certainly be higher than where the 1 year is today. But you're going to be tested, you're going to lose money. And then I'm saying to you, but as you're tested and you're losing money, I want you to buy your best ideas at that entry level. Like begin buying it at the 1 year moving average and commit to buying it below. So I thought, let's look at a stock which has had a huge mean reversion moment. And that's Albemarle. I was looking at this a year ago, and then it came back in my mind as I was reading the long thread by the macro guy out on Twitter, whatever he's called, Campbell. And obviously he was talking about the dynamic of the rare earth and China's concentration. And again, so at the beginning we spoke about fake Chinese growth and fake export success. We're calling it fake because growth at the expense of disciplined capital allocation, growth which is profitless, feels fake. And the Chinese have pursued this fakeness to achieve very real and substantial sovereign objectives. And one of the recurring themes I talk about is Nokia and Ericsson, because they were one of the first industries which didn't mean revert. The writing software and the maintenance of these incredibly powerful base stations that run our lives. We all have telephones. Base station software. Nokia and Ericsson lost over 90% of their prices from the peaks of 2000, like Amazon did. But Amazon now is many multiples higher than that previous peak. They are still 90% below because of Chinese fakeness, determining it to be strategically important and creating industries that would accept almost no return in order to dominate the global market for software for base station for 5G networks. And we're all beginning to understand that played out. The first time it played out really was in rare earths, where China again has a very, very commanding position in the refining. The rare earths are found everywhere on the earth, but China has 90% odd of the refining capacity, largely again because of a social pact which gave it great freedom in terms of the labor that it used, the environmental damage that it incurred, and the price that it charged for all of that. China has dominated rare earths, and it dominates lithium. And so I was reading that. And lithium, I looked at lithium a year ago because lithium is the batteries. It seems very, very strategic, seems very cutting edge. Lithium batteries, or all the battery technologies will have a component of lithium. Which is kind of interesting. And a year ago, the price of lithium carbonate and lithium hydroxide, like, it's had a bear market. Peaked in 2022. Prices which were like 60, 70,000 came down to dropped 90%, 6,000, roughly around about 10,000 today. Again, the Substackers, I will present that chart to you over the course of tomorrow. For the rest of you, I guess you can't even see it on your Bloomberg. Maybe I'll post it. Maybe I'll post it on Twitter. I'm not sure. And so I was intrigued by that. And 60,000 was kind of the peak of the environmental social governance, the wokeism. And so there was definitely an inflated sense of the need for lithium, and a sense which neglected the fact that we were about to divorce socially and economically from China. And so it would no longer be appropriate for China to have this concentration of that refining capacity. And also what China does is it periodically dumps a lot just to keep Western interests away from areas that it deems to be strategic. Again, Nokia, Ericsson on their ass for 25 years. The Chinese don't want them to be a competitive threat. And so Albemarle has had the mother, God, that was a long introduction. Albemarle, shut up me, has had a horrible bear market. So I said I've got a share price that goes back to 1995, I said. Presently putting it in my bar chart, my free chart service. Albemarle, the price slipped from about 330 to $50. And again, it's that time frame, roughly 2022, late 22, early 23. And it was troughing 6 months ago. And since then, we've had two positive up quarters. That I would. So if I was managing money, I would buy Albemarle. It seems to be rare, seems to be well organized. It's had a bear market, and it's gaining. I've mentioned this previously. One of the things I look for in stocks is where they're pro public choice. So lithium was pro public choice, batteries, EV, and it went to 60,000. Like, but we're talking about equities because it was unprotected at 60,000, and the Chinese, and that was creating a demand for people like Albemarle. And Albemarle is it's mining and it's refining. But the actions of the Chinese, when you come in and you dump it, so the Albemarle has got greenfield and other domestic sites in the US. And this is all about onshoring. We're going to be doing electric vehicles. And forget EVs. One of the big things is you need a huge battery pack for your data center. You can't have an interrupted power. So you need huge battery packs. I've got a battery pack here at Blanc Bleu down in the garage that's taking the solar. So again, storage from solar, you need the lithium. And you can mine, they're mining it in Australia, they're mining it in the US, but you need to refine it in the US. And their chief executives like, at these lithium prices, this is not economically viable. So the US government is going to make it economically viable. And what is it? The price is below $100. Remember, I wasn't going to buy Ericsson at $10. I want to buy it at $15. So I thought it would be interesting just to mention a stock because it's gnarly. And I know that you guys listening, especially my Substackers, I know there's a lot of kind of mining expertise there, and you know lithium inside out. I'm just looking. You know it better than I do. I'm just saying I've got little patterns and techniques that I've created over 30 years, which allow me to be creative and take an investment in the here and now. What else can I tell you about Albemarle? Valuation, I don't really care about. Doesn't seem too bad. Yeah, I don't really think I want to say too much more about Albemarle. It's valuation is fine. It is now pro-public policy. It is the largest pure integrated play in lithium. Lithium's going to be with us and around us for a long time. And the producers presently, they need a profit incentive and they need higher prices. And so they'll get some combination of, won't be tariffs, but it'll be, I guess Trump will raise the price domestically of lithium so that will fund greenfield and make the operations economic. Good things are coming to the world of lithium. And 1 year moving averages are interesting places to look for stocks which have, when you look at a 30-year chart, you want the chart to begin in the bottom left-hand corner and end in the top right-hand corner. And this was going that way, except there was this sovereign intervention by the Chinese. I think we understand why. Yes, there's a ton of lithium. It's not scarce, but the refining is scarce. The refining is necessary for the world to make the advances that is decided that politically and socially we've all agreed we want these things to happen. We don't want to burn hydrocarbons, blah, blah, blah. And it's and we've had these industries. How interesting that Ericsson kind of had that little breakout. At what point do we hear more about base stations? That was the rage, and that's why I started dusting down my Nokia and Ericsson when the US started getting really heavy with it. Hawaii, whatever it's called, Huayu, how do I pronounce that? Forgive me. HUAEWIE, whatever, because that dominates base stations. The political focus just now is rare earths. They're moving. They're all tiny little companies. And rare earth, that MP project, is it MP or PM in the US? I forgot. I have owned just about every stock in the universe of man. I owned the company. Was it Molybdenum? Was it Canadian listed? I owned rare earths back in the day, in 2007, 2008. I mean, the stock I had, it went bankrupt. After I sold it. Anyway, oh my God, was that a potato salad or a word salad? I have wings. I mean, the great thing is I start these things tired and I finish them. I mean, you finish them exasperated. I finish them going, another one is in the bag. People, another one is in the bag. I've spoken for over an hour. I'm going to say, bisous, love you. And my God, am I going to do this again tomorrow? What am I going to talk about? Anyway, good night. Bye-bye. Bye-bye.